So चलिए शुरू करते हैं। आज हम लोग डिस्कस करेंगे कंपनी लॉज के बारे में, कंपनी लॉ की हिस्ट्री एंड ऑल. So the company's law, there's a key phase which influence the company legislation may be divided as the first phase was the colonization era. Okay, like अंग्रेजों के टाइम पे जो लोग समझे हो, so that's the colonization era. And then period after World War II, and then the opening of the Indian market in the year 1990. Okay, so let's start in the history. So history की हम लोग बात करते हैं कि the concept of the company laws are taken from the English Company Act 1844. The first time we take up the concept, and then the first company legislation in India was passed in 1850, known as the Joint Stock Companies Act. This act was replaced by the Joint Stock Companies Act 1857, which introduced the principle of limited liabilities for the first in India. And this act again as a Joint Stock Company Act 1860 modified by the addition in the principle of banking companies, and in 1866 the first comprehensive act provided for the incorporation, regulation and winding up of the companies. In 1866 act was recast in 1882 and remained in force till 1930. Later, the Indian Companies Act of 1930 was passed, followed by the English Companies Act 1908, and after that, this act was amended and recasted several times, almost every year. Okay, so finally, the Companies Act 1956 was passed and came into the force 1st April 1956. Based on English Companies Act 1943, it consists of 658 sections and 13 schedules. And after 25 amendment, Companies Act 2013 passed by the Parliament by introducing new company bill. It came into the force 29 August 2013 and so on. So इस तरह से हम लोगों का ये सब चीजें थी. So हम लोग अब थोड़ा ब्रीफ में बात कर लेते हैं. In the year 1850, the first company enacted for the registration of the joint stock companies was introduced in India. This enacted, as the mentioned before, was based upon the English Companies Act 1844. So जो 1815 में ये एक्ट आया था, ये इंग्लिश कंपनीज एक्ट 1844 से लिया गया था और इंडिया में इसको इम्प्लीमेंट किया गया. Later in year 1857, the concept of limited liabilities was recognized in the company's legislation, but the said limited liabilities were not extended to the banking company. The concept of limited liability into the Companies Act was introduced earlier in the English Companies Act 1856, but by the year 1858, the concept of limited liabilities was extended to the banking companies even in India. So 1856 में जो आपका 1858 में आपका बैंकिंग लायबिलिटीज भी इसमें इंक्लूड कर दिया गया. So in the year 1866, Companies Act was yet again passed for consolidating and amending the laws related to incorporation, regulation, winding up and trading companies and other associations. This act was based upon the Companies Act 1862 of England, and this act was recast in year 1882 and was in use until 1930. In the year 1930, another Indian Companies Act was enacted based upon the English Companies Consolidation Act 1908. Companies Act of 1930 was amended in the years 1914, 1915, 1920, 1926, 1930, and 1932. But the major amendment of the Companies Act of 1930s, who was passed in the year 1936, this amendment was based upon the English Companies Act 1929. This Act of 1913 regulated the Indian business company until 1956, and by the end of 1950, Bhabha committee was set up under the chairmanship of S.C. Bhabha for the defense of Indian Companies Act with the reference to the development of India's trade and industries. The committee submitted the report on 1952. This report was Bhabha Committee was accepted Companies Amendment Act 1956. This legislation was made keeping in mind the English legislation of Companies Act 1948. So origin of the Companies Act 1956. So 1956 का origin कहाँ से हुआ? The period of Second World War and the post-war period witnessed an upsurge of industries and commercial activities on an unprecedented scale in India, and large profits were made by the businessmen through incorporated companies. The government of India took up the revision of the Companies Law immediately after the termination of the law last war. The two companies lawyers, one of Bombay and one of from the Madras, who was success, successfully appointed to advise government on the borderline to which the Indian Companies Act 1930 should be revised and recast in the light of the exercise gained during the World War years. Their report were considered by government and memorandum embodying its tentative views was circulated towards the end of 1949 for eliciting an opinion. So on the 28th October 1950, the government of India appointed a committee of 12 members representing various interests under the chairmanship of Sri S.C. Bhabha to go into the entire question of revision of the Companies Act, which particular significance to the development of the trade and industries in India. This committee, popularly known as the Bhamba Committee, submitted the report on March 1952, recommending comprehensive change in the Companies Act of 1930. The report of the Bhamba Committee was again the subject of discussion and comment by the Chamber of Commerce, trade association, professional bodies, leading industries, shareholder, and representative of labor. The bill, which was eventually emerged as the Companies Act 1956, was introduced in the Parliament on the 2nd September 1953. So it was a comprehensive and consolidating as well as amending piece of legislation. This bill was referred to a joint committee of both houses of the parliament in May 1954. The joint committee submitted its report in May 1955, making some material amendment to the bill. The bill, as amended by the joint committee, underwent some further amendment in the parliament and was passed in November 1955. The new Company Act 1st of 1956 came into the force of 1st April 1956. So the era of liberalization, privatization and globalization. So the enthroned companies legislation made in time to close market and hence inadequate to handle the global entry. This non-conductive legislation would have offset the Indian corporate sector. The pursuance of necessity of the Companies Bill 1993 was formed but was later withdrawn. The Depository Act 1996 was introduced in India and later working group was constituted to rewrite the Companies Act 1956. In pursuance of above made efforts of the Companies Bill 1997 was introduced in Rajya Sabha in August 14, 1997 in order to replace the prior legislation. The President of India promulgated the Companies Amendment Ordinance in 1998 on October 31st, 1998, but this promulgated the Companies Amendment Ordinance 1998 was soon replaced by the Companies Amendment Act 1999. So after that, like Companies Amendment Act 2000 came into the force and enacted, which was followed by the Companies Amendment Act 2001, where the Section 77A was introduced in certain to buy back of the share. This amendment allowed the board of directors to buy back the shares up to 10% of the paid up capital and free reserve provision not more than one such buyback in made during the period of 365 days. Then the Companies Amendment Act 2002 was enacted, which was followed by the Company's Second Amendment Act 2002. The First Amendment introduced the setting up and regulating the cooperative as a body corporate under the Companies Act 1956 to call the producer companies. The Second Amendment was expedite the winding up the process of the companies to facilitate the rehabilitation of sick companies and protection of the workers' interest. The Companies Amendment Act 2006 was brought into the force of 1st November 2006, where the introduced the director identification number and also introduced electronic filing of various return and forms. So the Companies Act 2013 replaced the Companies Act 1956. Legislature introduced idea of corporate social responsibilities, class action suits, fixed terms for the independent director. The provision of raising money from the public was made little stringent. Prohibition of the or inside trading by company directors or key managerial personnel by declaring such activities as a criminal offense. Its permit shareholder agreement providing for the rights of first offer and right of first refusal, even in the case of public companies. The Companies Amendment Act 2015, it received the presidential assent on May 2015 and became the operation on 29 May 2015. It is designated on address the issue of the shareholders such as chartered accountant and other professionals. So the Companies Amendment Bill 2016 was intended to be passed by the legislature, but after referring it to the committee, this bill went through a lot of correction and amendment into the Companies Amendment Bill 2013-17, which was the pass as the Companies Amendment Act 2017. The silent feature of the amendment brought by the act are uh, synergy with SEBI and RBI rules. For the first time, several provisions have been amended to align the Act with the various rules and regulation of the SEBI, Security Exchange Board of India, and RBI, Reserve Bank of India. For example, Section 194 and 195 of the Act, which was dealing with the offense of insider trading and forward dealing, have now been omitted since the SEBI regulate were sufficient of cover all. So वो सेबी के अंदर डालते 194 और 195 जो डील करते थे आपके इनसाइड ट्रेडिंग and the instance of such fraud further disclosure of the made of the prospects have also been aligned with the SEBI's power to regulate IPO's initial public offering. The definition of debenture has been amended to permit RBI to disqualify certain instrument as debenture and uh, pro, proportionalities of penalties. The quantum of penalty will now be lavish, taking into consideration the size of company, nature of business, injury to the public interest, nature and gravity of default, repetition of default, etc., which is one of the most uh, introduced appreciated amendment. Two new provisions regarding the determining of the level of the punishment have been freshly introduced, and lesser penalties for one person companies and the small companies were inserted. The provision for small companies and the penal vigor has been reduced. So placement process made easier in private sector. The placement process is rationalized by doing away separate offer letter details of to be kept in record of the companies and hence reducing the number of filing of registrar. The company is not allowed to use money for private placement unless allotment made by the return of the same field with the registrar to make sure that investors are informed and disclosure are made under explanatory statement as provided in the Rule 13 Clause 2 Subclause D of the Company's Share Capital and Debenture Rule 2014 embodies in the private placement application form. So change in the definition of private placement is proposed to umbrella all sureties, offer and invitations other than rights. The companies would be allowed to make an offer of multiple securities instruments simultaneously. So standard for independence director, section 149 of the act deal with the disqualification and disqualification of the independent director. Subsection 6 provide of various disqualification for becoming an independent director, one of which is such a person having pecuniary relationship with the company, its holding, subsidiary or association companies or their promoters or directors. The amendment clarified that the pecuniary relationship exclude the remuneration of the director having transaction not exceeding 10% of his total income of such amount as may be prescribed. So ये चीजें वो लेके आए. And then the Companies Act 2019 received the assent of the Parliament in 31st July 2019. While introducing the bill in the Lok Sabha, the Honorable Finance and Corporate Affairs Minister Nirmala Sitharaman said, the bill seeks to ensure more accountability and better enforcement of strength the corporate governance norms and compliances management in corporate sector as enshrined in the Companies Act 2013. The major reform undertaken by the Ordinance in 2018 and 19 introducing the following: a recategorization of the offence which are in the category of compoundable offence to an in-house adjudication framework. However, no charge has been made for any of the non-compoundable offence. Ensuring compliances of the default made and prescribing deterrent penalties in case of repeated defaults. So, conclusion: the amendment brought to the legislation were earlier recreative in nature. For instance, of major amendment were in reaction to the global phenomena of such like colonization era period after World War II, and third, the opening up to the Indian market in 19th. So, but the recent amendment are more productive in nature and seek to increase the efficiency of the legislation with respect to the dynamic of the society. So that's all about it. अब इंडिया के जो आपके सारे अमेंडमेंट आए हैं, लाइक एक बार मैं आपको ब्रीफ दे देता हूँ. लाइक इंग्लिश कंपनीज एक्ट 1844 से हमने वो स्टार्ट किया था. देन इंडियन कंपनीज एक्ट 1913, देन 1996, 1952, 2001, 2014, 2015, 2017, 2018, and now last amendment act was 2019. So thanks for watching the video. If you like, please like it, comment, share, and subscribe the channel. Thank you for watching.